Shares of WW International are down almost 90% this year. But recently, the stock's gotten a significant boost. In October, it jumped significantly and its trading volumes were also up, specifically around October 8th and October 9th. So I'm going to look at what's behind this recent surge in interest and in value, and whether this could be a turning point for the stock and whether it's a good time to invest in it. If you like this content and want to see more of it, check out smartstocks.ca and also be sure to subscribe for more of these types of videos. So the big reason Weight Watchers stock jumped around this time in early October was that it announced it was going to give its customers access to compounded GLP-1 drugs. So GLP-1 drugs are weight loss drugs that help people have helped people significantly lose a lot of weight. So the big popular names would be Ozempic and Wegovy, which Novo Nordisk makes, and there's also Mounjaro and Zepbound, which is made by Eli Lilly. So there's the big GLP-1 drugs that people have been using. Now, Zepbound and Wegovy are approved for weight loss, and Mounjaro and Ozempic are actually approved for diabetes, but people have been using it because they can lose weight on those drugs as well. And so there have been shortages of these drugs, and so compounded GLP-1 treatments are basically customized versions of these drugs. So they contain similar ingredients, not exact copies of them. So these are not generic medications that arise when a drug goes off patent and there's generics available. So compounded ones are different, and they're only possible when there's a shortage. So investors are obviously excited about the prospect of Weight Watchers taking advantage of a lot of the hype surrounding GLP-1 drugs, and taking advantage of the fact that there are shortages right now to help boost their revenue. Because the big problem with WW International is the Weight Watchers brand. I mean, that's mainly for people who want to lose weight and sign up for the company's programs. But if people are, able to just lose weight by just using GLP-1s, then why bother with the Weight Watchers programs anyways? And that's a big reason why sales have been struggling for WW International in recent years. For example, here we could see in the trailing 12 months, revenue is about $829 million. That's down from the previous year, down from 2022, down from 2021, and down from 2020 when revenue was almost $1.4 billion. And on top of that, the company is no longer turning a profit. It's burning through cash and incurring losses. So financially, WW International has been in pretty bad shape. That's why the stock's been nosediving, especially with GLP-1 drugs arising in popularity. But now with WW International jumping on that bandwagon, some investors are optimistic that maybe this could be the start of a turnaround for the company, because if it can give access to its access to these drugs to its customers, then that could be potentially a very big growth catalyst. Now, the one big problem with this, however, is that this is not a long-term solution, because compounded drugs are only allowed to be made when there's a shortage. And Novo Nordisk, the company that makes Ozempic and Wegovy, recently asked the FDA to stop compounding pharmacies from making these copies. And so for Novo Nordisk, the problem is that people have had severe reactions to these copies, to what people call these knockoff versions of Ozempic and Wegovy. And the danger is, that could hurt the brand if people think that, they took Ozempic or Wegovy and they had a bad reaction when realistically it was a compounded version of the drug, which isn't an exact copy. And so Novo Nordisk's concern is that, these may not be accurate replicas, and that they're not safe. And so the risk is that that can hurt the brand. Even though Novo Nordisk, it does have a supply shortage for these drugs right now, it still doesn't want compounding pharmacies to be making copies of their drugs. And another problem is that Eli Lilly, if we go down here, so Eli Lilly also has drugs which are no longer in short supply. So here we can see Lilly's weight loss and diabetes medicines were taken off the agency's shortage list. So the FDA no longer has them listed as drugs that are in short supply. So those are a couple of drugs, Mounjaro and Zepbound, that compounding pharmacies would not be able to make, presumably because they're no longer in shortage. Now, Weight Watchers, for Weight Watchers, they could potentially still try to continue offering a compound in semaglutide, which is the active ingredient in Ozempic and Wegovy. But if Novo Nordisk is successful in getting regulators to not allow it, then that could shut the door on that. And plus, as Novo Nordisk invests in additional capacity, production capacity, that could also lead to those shortages no longer being an issue, or those drugs no longer being in short supply. And that could also eliminate the possibility for Weight Watchers to provide compounded versions. So either way, it's not a long-term solution for WW International by any means. Even if it gives them a short-term boost, there's still much bigger problems with the business today, and that's that it's not generating revenue growth, and it's unprofitable. And if we look at its actual cash flow over the trailing 12 months, the company has been burning through quite a bit of cash, operating cash. Free cash flow minus almost 31 million. And if we look at its balance sheet, that's also problematic because WW International isn't sitting on a whole lot of cash. If we look at its current assets, just $42.7 million in cash and cash equivalents. So it's not sitting on a fairly strong financial position. And so a lot of investors are worried that the company is not going to be able to stay around for much longer. And one of the reasons the stock is very volatile right now is it has a fairly high percentage of people shorting it. So the percentage of its float that is short is around 20%. Now that's come down from over 30% earlier in the year, but for a normal stock, this percentage might be around 10% or less, maybe even 5% or less, especially when you're talking about safe blue chip stocks. You wouldn't expect this to be more than a few percentage points. So W International still is at around 20%, which is very high. So this means there's a high possibility for short squeeze if obviously if it does really well and proves the short sellers wrong, that the business is sustainable and safe, then obviously that could trigger a short squeeze. The stock could surge. But with Weight Watchers depending, or WW International relying heavily on these compounded drugs, and that potentially being a growth catalyst for them, the risk is that may not result in a big payoff for the business outside of a potentially a short-term boost. So I don't think that the short interest is necessarily going to decrease on this news, especially with Novo Nordisk asking regulators to stop these compounding pharmacies from producing copies of their drugs. So W International is a really volatile stock, and the risk is that this strategy to work on offering compounded drugs may not be a sustainable one. And even if it does give the stock a bit of a rally in the short term, investors should be very careful because odds are this is not going to last for the long haul. And the bigger problems plaguing the business right now are still a lack of growth, an unprofitable operation, and W International just not having a whole lot of cash on its books. So the risk of future offerings and dilution is incredibly high. So before you invest in the stock or think that it's going to surge just because it's getting involved with GLP-1 compounded drugs, you should be aware of the risks involved, because the danger is that it's not going to save the company and its business from more of a tailspin or more losses to come in future quarters. So this is a risky stock that I would definitely avoid right now, because even though it's been trending recently, it's been picking up a bit of steam, that could prove to be short-lived.